Hi, it's Peter Temple for Monday, February the 21st. This is the market report, and I want to spend a bit of time tonight on the S&P and the US equities, and I will touch on the euro as well, and just give you a picture as to what I think is happening because I've had a really good chance tonight to, being Friday night, actually, the 19th, to take a really good look at the market. And I'm going to refine some of my comments on where I think things are going. So here we have the S&P 500. This is the 1 hour chart, and we'll go back to our truncation here, which I am more sure than ever that that's what we have set up here. And then we had a wave one, wave two. This was wave three, and so we came down again to a new low. So this is actually the bottom of wave three here on this first wave. But the challenge I've got here with this wave is if this is the first wave here and the length of it, in the S&P, the fifth wave is too short. It should come down to here. And so this more looks like an ending diagonal and a double bottom, which usually finishes off the first part of the first wave. And I've just seen that way too many times before to get the idea that this is the actual full wave. So what we then did is, of course, from the bottom of the third is came up in this one wave that went straight up. So this is an A wave. And the question has been whether we're actually going to do a second wave. Let me get the length of this. A second wave up to here, which would be 62%, or whether we're going to stop right here at the previous fourth, this ABC up, which would be the previous fourth, and then head down from there. I get the feeling we're going to stop here, but I wouldn't be surprised to see us go up. Well, I would be surprised to see us go up and do a second wave because everything I'm seeing in some of the other indexes tells me that this wave is going down to finish the first wave. And the big thing for me is the shortness of this last, what you would have thought was a fifth wave, but it's too short. So looking at this tonight, I see that we've got an A, B, and the thing that concerns me about this is that the B wave hasn't really come down far enough. So I think on Sunday what we're going to see is another leg down, and it could go down, usually it goes down 38% of the length at least, and we haven't done that. And so the time is a little short here, and I think we're actually going to come down and then go back up. We could go up to a second wave, but I don't think we're going to do that. And in fact, we could even go down a little bit lower than the B wave. But if we go down below about 1850, 1840, then we'll be down too far, except that this wave so far is not motive. I want to just jump in here. Oh, let me say one more thing about this. If this is a fourth wave and we turn over here, then our fifth wave is going to head down to 1620. And so that would be our target, and that is a perfect length for this wave. I'm jumping into the 5-minute chart on the S&P 500. I just want to show you something on this particular wave and what happened on Friday and why I'm concerned about the length of this wave down. This is obviously a wave in 3, so we know it's not motive, so we know we're not going down to a new low. But what concerns me after we had this A wave that came up is we haven't come down to 38%, which is right here, and we really need to come down to at least that level, sort of the previous fourth, before going up and finishing the C wave. The other thing that I'm seeing that happened on Friday is we have a wave up in 3, and this really should come up in a 5 to a final top up around 1940, 1950, somewhere in there on the S&P 500. I think it's 1940 on ES. So I think we're going to come down here to at least this B level, and then we will go up to the top. So I would say we're looking at a top sort of midweek, not Monday now. I think it's probably midweek, which my target cycle turnover is the 23 to the 25th, and that would mean later on during the week. So we'll see what happens. Monday, Sunday, I think we're going to come down here and hit this bottom. Now, I don't often show you the global Dow, but I want to look at the global Dow because to me, the larger the index, the more people you have in it, and it's more representative of what the herd thinks. And this is a very clear pattern. I'm going back to the daily chart on this. and you can see the top here, and we had a 1, 2, 3, 4, 5. This is our first wave down. And to an Elliott waver, a first wave is critical because once you have a first wave in 5 waves, it determines a new trend. And so what we had here, and if you were with me back when, this would have been in December, November last year, we watched the top of this thing and I said it has to get to 62%. And it did, touched it, and it's come down now in almost a full third wave. And so this is what I want to watch here because this is telling us where the next wave is going. I'm just going to jump in a little tighter on this one. I'm in now tighter to the 2-hour chart on the global Dow, and you can see the top of our second wave here. We've actually come down. It's interesting when I look at the structure of the waves. I consider this a set of motive waves here. You can see the 2, 3, 4, 5, and then we're up to a new top here. 1, 2, 3, 4, 5. And actually this I am considering the first wave of this sequence because it has the usual first wave length in that the first wave of it is as long as the second wave down. So that's the perfect length. And if you take the length of this first wave, you can actually go down and look at this second wave, which is actually the third wave down here, is exactly the right length. It's 1.6 the length of the first wave down. So we're looking at a very motive sequence here, and we now have what looks to be forming the fourth wave, and this I would think would come up to about this previous fourth wave level and then head down again. There's no real reason at this point for it to come up any higher. So that tells me that we're probably going to do a fourth wave in the US equities, and that's one of my my little backups, the support for my present count. Here's the NASDAQ, and we haven't looked at that for a little while. This is the hourly chart. When we go back to November, or rather December in here, and we had this truncation on the other indexes, the NASDAQ actually traced out the full 5 waves, and this was one of the cues to me that, hey, in the Dow and the S&P we had a truncation, because this is a complete 5 waves up. And then we had this funny looking wave down, and this is actually an ABC, but I sort of put that in a category of, hey, we had an ABC down in the other indexes, and this is probably, because they all move together, this was probably a result of that. And so this is a little bit questionable, but now we have had a very motive third wave down. And in actual fact, when you measure these, if you take the first wave down as being 1, your Fibonacci tool here, and then you go down and measure wave 3, it is exactly 261.8 or 2.618, the length of the first wave, which is, as long as it's a multiple, a Fibonacci multiple, I'm happy. And so that's just the right length. And then we have this fifth wave, and actually the NASDAQ came down in a clean 5 waves. It hit a new bottom here, but this fifth wave is short. And even though the length of this is just about right, it's 1.6 times the length of the first wave, this is telling me that there might be, because of the shortness here, more to come. And so we have this wave that's coming up in an ABC, and I'd say the same thing here. It's a little bit short. It may come down further, and I would expect this only to get up to the previous fourth wave before we see a turnover and to see the rest of this wave down. Now, if the NASDAQ does a fourth wave here and goes into a fifth, this is going to take us down to about 3,600 in the NASDAQ. We'll just get rid of this over here. So that's my looking ahead on the NASDAQ, which seems to be pretty well in sync with the other indices. It's just that the interesting fifth wave here, they all sort of did something different, the main major indices in the US equities. But I think we're going to get all queued up and back in sync here at the top of this fourth. Now, it could go up to a second wave, but I think because of the incompleteness down here, we're going to see a fourth wave and a fifth wave before we come back up here and do a second wave. Now here's the euro, and I'm looking at the 4-hour chart of the euro. So this gives you the entire sequence, the pattern from the bottom here, which was at the beginning of December. And we saw this big wave up, and we had an ABC up here, which I will consider sort of being a first wave. And then we've had this backtrack to 62%, then a triangle. And you can count the waves up here. We had a 1, and this is a counter trend wave. So this wave is in 3, which is fine. So this becomes the first wave, and then we had an ABC down, and then you can see that we've got a 1, 2, 3, 4, 5 waves up, which I consider to be a third wave. And we've actually come back here in the last few days to what is a double 4 here. So you can see that this is starting to look like the U.S. equities upside down, which has been what this index has been doing, or this currency pair has been doing. It has been pretty well in lockstep with the U.S. market. So I would expect this to be going up, and if I was to measure our length of our waves here and take this wave, our first wave here, as a Fibonacci 100%, you can see that we've actually come up right to the 1.6 of the total wave. So the question is, do we go up to a length of 1.6? Let me just take this. 1.6 the length, if we took this wave here, 1.6 the length of the first wave would actually take us up to this point up at the top here, which is 1.16. And so we could see this go up as we get our fifth wave of the U.S. equities. So this is what I'm looking at in lockstep. Now, the other side of that is that this then could be complete as a 3, and we could see this ABC head back down here, which would be the opposite and do our second wave. So I'm a little bit either way on this, but if we break this particular line here, then we're going to go down to this level here and do a second wave in the euro, which would mean that the U.S. indices would probably go up and do a second wave. So, you know, this is kind of my bellwether to see whether we do a second wave in the U.S. or not. I think we're going to stay here and do a fourth, and that this will now head up, but we'll probably spend a little bit more time here, and again, may see this head up during the week. So this is kind of an either or a little bit as per the U.S. equities, but the long term is up. And the same thing with the U.S. equities, the long term is down. So that's my look at the market for this week. Great trading. It looks like it's going to be a really interesting week this week, and a chance to make some money from the drop in the U.S. equities.